Let's dig deeper into those big swings in FX markets with Bloomberg Intelligence Chief Asia FX, as well as rate strategist Stephen Chiu. Stephen, let's have your take on the yuan, supported by the fix today. But you know what PBOC is saying? It is not quite ready to be tolerant of a weaker currency.
Yeah, that's right. I think we have to remember that yuan tends to be quite strong in the first quarter because of seasonal reasons, because of Chinese holidays, because of market looking forward to some positive measures out of the two sessions. And that's why, actually, if you look at the regional performance, the CNH and CNY has been quite resilient until last week. So now, first quarter is nearly done. So internally speaking, the yuan seasonal tailwind is gone. So now market will focus back on the structural issues for China. For example, the basic balance is still slow, and then we are still seeing rate differential in favor of the dollar. So basically, that's why the yuan start to drop again. And of course, market want to get support from the Fed. They want to get even from the BOJ by having a stronger yen. Hopefully, we also drag the yuan higher. But of course, last week we saw that the Fed is not quite ready to cut, at least not before June. And the BOJ, yes, they did hike for the first time since 2007. But as you can tell from the market reaction, from the yen, from all that, market is disappointed. It's not strong enough. So that's why the yen slumped and the yuan couldn't get help from there as well. So that's why right now the yuan is facing renewed pressure against the dollar.
Stephen, when it comes to the yuan, was the PBOC testing the markets to see the reaction from investors if that fix was weaker than anticipated?
I mean, you can see like once the PBOC last week, for example, they set the fix just slightly higher than 7.1, then you saw the spot basically just sort of collapse. So that's why today you saw they fix it back below 7.1 to stabilize it. And of course, we saw the CNH back at 7.25 and sort of stabilize a little bit. But the thing is, like over the next few weeks, if the dollar stay resilient, then it's very hard for them to keep doing this. Then probably they will have to be more forceful in terms of supporting the yuan.
And when it comes to the yen in particular, Stephen, we saw jawboning from Canada today. I mean, it is an effort to prop up the currency. What would it take for actual intervention? The last time we saw that, it was when the currency touched 152.
I think it's very close because usually we look at two metrics. The first one, as you said, is the level. So now we are close to 152, so we are there. The second metric is the pace of the yen drop, where if you look at the yen over the last 2 weeks, I think we are talking about near 2% drop over the dollar per week. So I think that's fast enough. If you look at the two interventions back in 2022, that's the pace that will trigger the BOJ. So that's why we saw Canada this morning talking about they are watching the market. And usually what preludes the actual intervention is they will come out and say they are checking the FX rates. So when we saw that statement, then we have to be really careful of actual intervention in the yen.
All right, we'll keep a watch on that. BI Chief Asia FX and rate strategist Stephen Chiu, thank you for your insights.